everyone, and welcome back to Forex Scope. I'm your host, and today we're diving deep into the exciting world of GBPJPY. Get ready for a sharp, 15-minute and 1-minute timeframe analysis packed with actionable insights and potential trading opportunities. If you're serious about mastering the Forex market, hit that subscribe button and the notification bell so you never miss out on our expert analyses. Let's get started. The resistance zone is identified between the price of 201.795 and 201.870. This area shows significant price action activity. Specifically, looking at the 15-minute candles, we observe a notable period of consolidation and rejection around these levels. For instance, the candle starting at timestamp 176.245.2900 reached a high of 201.021 and closed at 200.981, indicating a potential ceiling. Later, the candle at timestamp 176.245.6500 opened at 201.092 and hit a high of 201.170 before closing lower, showing resistance to further upward movement within this zone. The price repeatedly tested these upper bounds and struggled to break through decisively, suggesting that sellers are actively defending this price range. The presence of multiple wicks on the candles within this zone also points to failed attempts to push prices higher, reinforcing its role as a resistance. The overall market sentiment appears to have found a ceiling here, with buyers being unable to sustain prices above this level for an extended period. The volume also shows an increase during these rejections, confirming the importance of this resistance. The support zone is identified between the price of 201.013 and 200.858. This region demonstrates clear signs of price bouncing back, indicating buying interest. Observing the 15-minute candles, we can see that prices approached this level and showed resilience. For example, the candle starting at timestamp 176.239.0800 opened at 200.967 and went down to a low of 200.858, which was then followed by a bounce. Similarly, the subsequent candle at timestamp 176.239.1700 opened at 200.925 and its low was 200.918, showing that the price found support near these levels and started to move upwards again. The formation of lower shadows, wicks, on candles touching or approaching this price range suggests that buyers stepped in, preventing further price depreciation. This repeated interaction with the 201.013 to 200.858 price band implies that traders view these levels as attractive entry points, creating demand and acting as a floor for the price. The consistent inability of sellers to drive prices significantly below this zone highlights its strength as a support level. The presence of multiple touchbacks and the limited downside penetration underscore the significance of this price area. The support zone is identified between the prices of 201.81 and 201.86. This area shows a clear pattern of price consolidation and multiple interactions, indicating a strong horizontal trading range. Specifically, looking at the period from 176.255.1780 to 176.255.2260, the price repeatedly tested the lower boundary of this range, failing to break significantly below it. The highest price within this observed period reached 201.886, while the lowest dipped to 201.794. The numerous attempts by the price to find a floor and bounce back within this zone highlight its significance as a historical level where buying interest has historically emerged, preventing further downward movement and creating a visible area of demand. The consistent rejection of lower prices suggests that traders view this price level as a good entry point or a place to hold their positions, reinforcing its strength as a support. This zone's formation is characterized by a series of lower-priced candles failing to sustain their declines, leading to subsequent upward price actions. The resistance zone is identified between the prices of 201.964 and 202.008. This area has demonstrated strong selling pressure, acting as a significant barrier to upward price movement. Observing the data from 176.254.5000 to 176.254.6920, the price has repeatedly approached this upper limit and has been pushed back down. The high price within this period reached 202.069, and the low price within this period reached 201.887. The repeated rejections at these levels suggest that a considerable number of sellers are active in this price band, willing to take profits or initiate new short positions, thereby capping any further price advancements. This formation indicates a price ceiling where selling momentum has historically overcome buying pressure. The presence of multiple candles failing to break and hold above this range, often with upper wicks extending into this zone before closing lower, reinforces its role as a key resistance area. The price's inability to decisively breach these levels implies that traders are wary of pushing prices higher from this point, waiting for more significant market drivers or a clear break of this resistance. Based on the analysis of the provided GBPJPY 1-minute and 15-minute chart data, we observe a dynamic price action environment. The Fibonacci levels suggest a potential upward trend as the starting price of 201.844 is less than the ending price of 201.956. However, the current price is trading near a significant 1-minute resistance zone between 201.964 and 202.008, indicated by previous candle rejections and the upper Bollinger Band touching these levels. The 15-minute chart also shows the price testing a resistance zone between 201.795 and 201.870. Despite this resistance, the recent upward momentum and the fact that the price is trading above the Bollinger Band middle line on the 1-minute chart suggest potential for a short-term upward push. The initial predicted movement is a slight bounce to 202.030, aiming to retest the upper bounds of the observed resistance. Following this, a potential pullback to 201.980 is anticipated as sellers might re-enter the market. However, if the buying pressure persists, a further move towards 202.080 is possible, potentially breaking through the 1-minute resistance. This could be followed by a consolidation around 202.000 before another attempt to move higher, aiming for 202.150, which would signify a successful breakout and a continuation of the upward trend. This zigzag pattern reflects the interplay between the lingering resistance and the current bullish momentum, offering opportunities for traders to observe and react to price action as it unfolds. The analysis incorporates the interplay of price action, volume, and technical indicators to project these potential price movements.